Matt, you said in your last video that the real estate market was over, finished. Now you're saying it's not?
What's up, fruitful investors? Welcome to my channel where, yes, I am a YouTuber, but I'm also a real estate investor and entrepreneur doing real things in the background, not just up here on YouTube talking about it. So this video is very controversial, possibly, because last week I made a video about how real estate was over, is doomed, and hint, I gave you a few little tips in there on how to not be. But in this video, I'm gonna give you 5 really detailed reasons on why the real estate market is actually not really doomed, why I think it's actually gonna bounce back pretty quickly. I'll tell you exactly when I expect that, and why everybody is freaking out in the headlines, because it's all you see on social media, it's all you see in the news articles. Obviously, it's fear. We're all doomed. This is finally the Great Recession, the Great Reset, etc. You know all the stuff people are saying. So I'm gonna give you 5 reasons on why real estate is actually not doomed and why it is one of the best investments. Number 1, the millennial dream of home ownership is not gonna go away simply because of a slightly higher mortgage payment. So here's the thing. Most of the boomers are retiring probably in the next 5 to 10 years, probably in 10 years, almost all of them are gonna be gone. And we have the biggest wave of a generation coming right behind them, which is me, the millennial. We're the kids of the boomers. So they're all retiring and we're all just coming into the market. We're of age now, where our careers are probably set. We're settling down, we're having kids, and we wanna buy a home. We grew up with that dream of home ownership thanks to our parents telling us you gotta buy a home, you gotta have a yard for the kids and the dogs to run around in, you gotta own real estate. We grew up with all of that mentality, and that is hardwired into the millennial mindset, into the millennial, ego of like wanting to own a home and provide and have a good family and the white picket fence and all of that. So that dream is not gonna go away because of a simply little higher mortgage payment. If you think it is, you are literally out of your fucking mind to believe that everybody's gonna scrap home ownership. We're all gonna move to New York City or Toronto and rent in a downtown condo and forget about home ownership, forget about having the 2.2 kids, etc. No, you're totally wrong. And here's why. So the average cost of the mortgage generally, with what's happened in Canada, our rates went up 0.75% in the past 2 months. About 2 months ago, something like that, 2 months ago, we had rates rise 0.25%. The market didn't really care. And then last week in Canada, the markets raised 0.5%. So a total 0.75. Now people are losing their shit. Home ownership's impossible. And you guys in the United States, your mortgage rates are going up even faster, slower chunks, but 0.25% predictably every quarter for the next year and a half. That's what Jerome Powell's saying. That's what the Fed is saying in the US. Our government went up a little faster and did 0.5 just like that out of nowhere, really like on 3 days notice. So everybody's losing their mind. Hey, sorry to interrupt the video. I know you're learning something cool and I love to give you investing tips here on YouTube every single week. But if you wanna accelerate your growth and cut years off your investing journey, I can just give you all of my secrets. Check the courses out below. Whether you want the exact materials and products that I use on my flips and rental properties, I have a course for that. I give you all the links to everything we buy in all of our properties. If you wanna learn how I raised over $50 million all from videos like this on YouTube and Instagram, I have a course for that. I'll show you how to attract joint venture partners like this. Or if you want personal one-on-one coaching from me and a ton more, see the links below. Anyway, just want to let you know, enjoy the rest of the video. Anyway, going back to the calculation. For every $100,000 of a mortgage, with the 0.75 in total, the 2 months that we raised rates, your mortgage payment, your fixed mortgage payment is likely gonna go up somewhere around $41.52. And if you have a variable rate mortgage for every 100 grand, it's gonna go up somewhere, I've been quoted from mortgage brokers, somewhere between $14 to $21 a month for a variable. For fixed, like I said, about $41.52 for every 100 grand. So the average home in my area of Kitchener-Waterloo, which is 1 hour south of Toronto, so it's a pretty big area, a lot going on, it's a pretty hype area, a lot of demand, so the prices are up. Not as high as Toronto, but we're getting there. So the average home in my area is $800,000 now as of filming this video. That's really expensive. That's a lot of home, okay? So the mortgage payment is gonna go up approximately $332.16 to be exact, so about $3,900 a year. That's what the mortgage payment is gonna go up, $340 a month. So do you really think a millennial couple who wants to have kids, maybe they already have kids, is gonna throw out the dream totally of home ownership because of $340 a month? That's a lot of money. It is a lot of money, but let's break it down a little further, okay? So the average income for the person who's buying this $800,000 home, not the average income in Canada or America total, the average income of the people who can afford to buy these $800,000 homes. It's a pretty good income, right? Give or take, it's probably around $70,000 per person. So total household, $140,000 a year for the household. Those are the people who are buying these more expensive homes, $800,000, $600,000, $700,000, $800,000, okay? So with $800,000 home, a 10% down is $80,000. The average buyer who's buying these higher priced homes are bringing 10% down, not 5%, they're bringing 10%, they're a little more savvy. So you have these more savvy buyers looking to buy these homes, not broke people. So all you see in the social media feeds, all you see in the articles on Facebook, people commenting, this is it, I can't afford that, the market's gonna finally crash. Those people were never buying real estate anyway. They certainly weren't buying the $800,000 homes, that's for sure, because they weren't in the market anyway. They weren't players. They're making $30,000 a year. They're making $35,000, $40,000 a year. They're renters. They're not the buyers anyway. They weren't even in the market to begin with, even before these interest rate changes. So they're the ones that you hear screaming from the top of their lungs, it's finally here, it's gonna crash, the great reset is finally here. Okay, so that's kind of my breakdown of who's buying these properties, and their dream of home ownership, their dream of settling down with kids and a dog is not going away over $330 or $340 a month on average. So will they freak out in the short term? A month, 2 months, 3 months, 4 months? Yeah, probably. They're also thinking like, Jesus Christ, $340 a month more? Like, come on, that's a lot of money. Let it sink in. They're gonna let it sink in for a couple months, and then they're gonna jump right back in the market. We've seen this happen so many times from 2010 to now when they're trying to, when the government's trying to raise rates from the 2008 recession. The government's been doing this a lot of time. We've seen this movie before, and everybody freaks out when they raise interest rates, everybody pulls back, and then they let it sink in. Spring comes, summer comes, and they go, you know what? $340 a month, $3,900 a year. You know what? Not so bad for us to have home ownership, to have a home that we own, to raise our kids in, and then they jump back in the market, and then we see the prices go back up again. That's just how it goes. Number two, 4 to 5% interest rates are still disgustingly low historically. Okay, so right now, the average rate at the time of making this video, I checked from TD Canada Trust, is 3.89% for a fixed 5-year mortgage. That's the rate right now after the interest rate raise, about 3.8939, let's call it 4%, okay? So 4% right now. 2 months ago, people were getting rates around 3.2, 3.5, okay? So it went up a lot. But 4%, guys, 4% in the grand scheme of historical interest rates is disgustingly low. It is like still free money. And again, the average Joe who just works their job, reading the articles for sure is freaking out. What the fuck? Like, how am I gonna afford this? They're not savvy investors like we are. Let it have a couple months, it's gonna sink in, and then they're gonna buy. I can almost promise you, because we've seen this movie over and over again. For example, for context, in January 2010, the 5-year fixed rate was 4.8, okay? So that was like pretty much right after the 2008 recession. The government was trying to pull back on the spending and trying to curb inflation at that time and trying to cool down the market and recover, play it safe. So rates were 4.8%, almost 5%, more than now. People were still buying homes back then. In January 2015, rates were 3.96, so right where they are right now. In 2015, we've had this before. In January 2017, rates were 3.73, so just a little lower than they are now. In 2017. Now in Canada, in my area of Southern Ontario, when did the market really start? When did all this craziness and this overzealousness and this big boom start? 2017, when rates were exactly pretty much what they were right now. So we're pretty much back to 2017 numbers. Now mortgage rates really started dropping in 2019. That's when the rates started dropping in 2020, obviously for what happened. That's when the rates came down to like almost free money. That's when they were so low. So we're pretty much back to 2017 rates. Were people buying real estate? Oh God, yeah. They were going nuts in 2017, still buying houses. That's when the multiple offers, bidding wars were all starting in Canada and Southern Ontario. That's when this all started, okay? So number three, the government can't raise rates too much, too fast, because their monthly payments on their debt will also go up. And this is what unsophisticated people don't realize, who are commenting on all these threads. Oh, we're doomed, this is it. I was reading articles today just for fun on CTV, CBC, whatever, which is like left-wing media of Canada. It's always fun to drop in those comments and just read what people are thinking. It kind of gives me an idea of what's going on in the market, what's going on in the real world. Not the real world, the fake world. But anyway, I was reading these comments and people were like, dude, the government should raise rates to 10 to 12%. That's what we really need to stop this crazy market. Put rates at 10% so I can finally afford real estate and prices come down. What these unsophisticated people don't realize is that the government can't raise rates. They really, really want to. They know there's a problem. They know inflation is crazy and they know the housing market is insane. They want to raise rates. They really, really do, but they can't. Because if they raise rates, they raise the rates on their own debt. And what has Mr. Lord Trudeau been doing for the past 2 years? Printing money like crazy. Debt, 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 debt. We're in so much debt in Canada, and you guys too in America. It's insane. The government can't raise rates too much too fast because then they can't even pay the payments on their own debt. It's a double-edged sword. They want to raise rates, but they can't. So they do a little bit here, a little bit there, a little bit here. And when this all calms down and inflation, the transitory inflation kind of figures itself out and the supply chain comes down and kind of comes back to base level, which it will. Inflation's not going away forever. It's a long time away, but the insanity of the inflation will go down. It is transitory in that aspect for some of those pieces, food, gas, those things will come down. Wood, windows, glass, building materials, they will come down when the supply chain kind of figures itself out. And I bet you in about a year's time, the Canadian government is probably gonna reduce rates again. When the economy starts chugging again and things are doing well, they're gonna probably lower it again, okay? So stay tuned for that. That's what I kind of predict. Number 4, when the market expects one thing, the opposite usually happens. So when everybody's screaming from the top, this is it, this is the market crash, it's coming. When you see in the stock market, this is it, the Russia-Ukraine thing, oh my God, the market's gotta crash. What do we often see happen? Coronavirus, the world's over, the market's gonna crash. What happened? Bounce the other way, explosion, growth. Because people want to put their money in safe assets, they want to still invest. When there's inflation that's going on like crazy, they have to put their money somewhere, which leads me to number 5. People gotta put their money somewhere. When the market's crazy and inflation's out of control, more people buy into the stock market, more people buy real estate, more people buy gold, more people buy Bitcoin. More money goes into the market to try and keep up with inflation, to try and beat inflation, and to try still invest. People will always need to invest, they always will, and real estate specifically is a hard, safe asset. Everybody knows it. It's been around for thousands and thousands of years. It ain't going anywhere. Everybody needs a roof over their head, so people are gonna keep buying real estate. In the short term, they're gonna freak out, they're gonna pull back, they're gonna sit back and say, what's gonna happen with the market? Once people digest, okay, $300 really is that bad. If it gets my dream of home ownership, if it gets me the security of my own backyard that I as a millennial grew up in and I can pass on to my kids, I want that as well. I want the white picket fence backyard for my kids. That ain't going away for $300 more a month. I can almost guarantee it. Anyway guys, that's the video. Keep your head on straight. Keep thinking like an investor. Don't think like a Joe Blow out there who freaks out and reacts like crazy. Invest your money smartly. Not even a word, but that's how we do it. If you like this video, smash the like button. Also hit that subscribe button, and I'll see you in the next video.